Hey everybody, Kriss here. Welcome. We're going to be talking about cryptocurrency and whether it's under attack or not, what's going on with the banks, what's going on with regulations, and we'll also be looking at the stable coins and where that stands right now and its effect on Doge, Bitcoin, Ethereum. We'll be looking at those, and if you want to ask questions about any other altcoins, please do while we're here. I'll be glad to answer those questions. If you're not here at the live stream and you're watching this as a video, because all my live streams turn into videos on my channel, that means you were out doing something else on Saturday night instead of spending your time with Kriss. But that's okay. You can leave a comment below as well. So where are we right now? Let me drop into the corner here. Let's take a look at the price of Dogecoin. We'll start with, 664, 666. It's been on a slow, steady rise today. Again, we had the big drop on Thursday over here, kind of an up and down Friday. Last night, we were talking with big gains here. Dropped a bit overnight, but today was slow and steady gains. We saw that in Bitcoin as well. Bitcoin, slow, steady gains from early this morning up through the afternoon, and Ethereum as well. And especially a lot in Ethereum today, because Vitalik Buterin was actually trying to help out as well with what was going on with stablecoins. So we'll take a look at that. So as we leave the charts and we go into the story, what's the story right now? Well, the big one in cryptocurrency is USDC. The stablecoin depegs. Crypto market goes haywire after the Silicon Valley Bank collapses. We talked a lot about this last night, but there's more to the story today. That's right, more to the story. But today, a lot of worries about what's going on with the stable coins, not only USDC, but also DAI. And I tweeted out today this about which stable coin is going to repeg first, because unlike many who were tweeting and leaving comments and notes about USDC going to zero and a run on stable coins and all of that, I wasn't worried about it because I think it was just a temporary thing and it's coming back. And I made this sort of side-by-side chart between USD coin and DAI. USD at that time was down at 91 cents. DAI was at 93 cents. And I tweeted out which is going to be first. And then after a couple hours, USDC had gone up to 95. DAI had gone up to 96 cents. So there was a trend coming back up. And let's see where we stand right now. Let me refresh this. This is on CoinMarketCap. We have USDC coin at 98 cents, and we've got DAI 97.6. So USDC has passed DAI, but still on its track back to repegging at $1. So but it looked bad last night. It looked really bad as USDC was falling, and on some exchanges there was some real big dips happening with USDC. But things are stabilizing, and I think by Monday, I think everything's going to be level again. But why did this happen? Why did this happen? Well, the Wall Street Journal, a very good article that kind of gives an overview of the whole thing. Well, the USDC stablecoin by Circle had $3.3 billion at Silicon Valley Bank. And so that's what created the fear, was that when that came out, that the USDC stablecoin had that much money that was locked and could potentially be lost as the FDIC was taking over Silicon Valley Bank, and it could go bankrupt, people started pulling out their USDC. And that is kind of how it started. Major cryptocurrency operated by Circle, meant to mimic the value of the US dollar, dropped sharply after the company said it had $3.3 billion tied up in the collapsed Silicon Valley Bank. USD coin fell below 87 cents on Saturday morning. The virtual currency known as a stable coin is designed to trade exactly at $1. It's backed by real US dollars and short-term government debt. That is its reserve, right? But if part of that reserve is gone, that's when people are fearful that it can't be pegged to $1. The peg loses, people panic, and they start withdrawing their USDC or buying other assets with their USDC, which I think is a lot of what we saw today and why we saw that increase in the price of Bitcoin and Ethereum. And yes, even Doge going up. I think a lot of those were USDC swaps to cryptocurrencies. So almost like the store of value of Bitcoin was more stable than the stable coin. That's right. But we've got CZ, really working on it and helping today, as well as Vitalik Buterin helping today, because they want all of this smoothed out and all this to be right. And we see that repegging is happening. Stablecoins such as USD Coin become an increasingly critical part of the digital asset ecosystem. Over $130 billion in market value. That's like 1/8 of the whole market cap of all cryptos are in stablecoins. Crypto traders rely on stablecoins to quickly get in or out of their positions in more volatile cryptocurrencies, and many companies store their capital and profits in stablecoins, particularly internationally. A lot of countries don't have real stable currencies, and many businesses in other countries instead put their money into stablecoins, and they rely on the security of the dollar and that peg with those reserves. So that's what it's all about. So that's pretty tough news about Silicon Valley Bank, and although Silicon Valley Bank wasn't involved in cryptocurrencies directly in any way, it was just that Circle had a chunk of their reserves stored at Silicon Valley Bank. And Monday, that could all be a wash. The FDIC could say, okay, Circle, here's your $3.3 billion back. You're good. But how did Silicon Valley Bank get into this mess? What happened to Silicon Valley Bank, and who's to blame? Well, Forbes says it's Jerome Powell, right? Jerome Powell, the Fed chair. Silicon Valley Bank's deposits grew from $61 billion at the end of 2019 to $181 billion in 2021, because located in Silicon Valley, right? It's got a lot of startup customers, and they're raising money through venture capitalists. And venture capitalists give them money, they got to put it somewhere, right? So a lot of them were using SVB. That was too much of a good thing. Silicon Valley Bank couldn't lend these deposits out quickly enough. So that's what banks do, right? They lend out deposits in order to make yield, right? In order to make money off of that. They don't just stick it in a vault, right? They're all using, that's what all banks do. They take the money that you deposit with them and they lend it out to make more money back. That's how they're so profitable, right? Well, when you have that much money, right, they had to look for something else to do with that money, because the traditional lending, they couldn't do it with that much money. So unfortunately, the large part of that something else happened to be long-term mortgage-backed securities. Silicon Valley Bank put 56% of its assets into these fixed-rate securities, which is way higher than most banks do. But they had all this influx of money, so that's what they were doing. Buying these mortgage-backed securities. Whether it was fully or semi-deliberate, Silicon Valley Bank was betting heavily on interest rates not rising. But as interest rates rose, when your treasuries went from yielding around 0.05% in 2021 to now up over 5%. And Moody's then downgraded Silicon Valley Bank. So to give a look at what that looks like, there's this chart. So back in 2000, right before the 2008 financial crash, in 2007, the rates were up over 5%. But there was that huge financial crash. Rates went practically to zero. Starting 2015, they started slowly building up, and then we're settling down a bit before we had the C-19 pandemic crash. And then we were flat, just about zero. And these were the 0.05% lending percentage that you could get. But they couldn't do anymore. So what they were doing is they were getting these longer term treasuries, maybe at about 1.75%, to be paid out over 5 to 10 years. Remember, this was the time here between 20 and 22 when we had the money printer going, right? We were getting all these stimulus checks. And they wanted those interest rates to be zero in order to entice businesses to borrow, in order to keep the economy going. Otherwise, the economy just would have shut down completely, right? And we would have been in this huge depression. And the government didn't want that. But then look what happened. Inflation. And I was talking about this back then too. You don't print trillions of dollars and not pay the price somewhere. So what does the Fed have to do to battle it? Raise interest rates. That's all they can do. They have nothing else. They have no other tools but to raise interest rates. And look how steeply from near the beginning of 2022 till now, look how steeply those interest rates have been raised. And they were raised far up over those treasuries that Silicon Valley Bank had over half their money in. So what does Silicon Valley Bank have to do? Once word kind of got out that they started to get in trouble, people were coming in and saying, yeah, you know, my $1 billion I have with you, I'm going to move it to another bank. And so they started withdrawing their money. Silicon Valley Bank only had so much that they could cover before they had to start selling these treasuries. And they were selling these treasuries for billions of dollars of loss. And then it all just spiraled. So it has nothing to do with cryptocurrency, what happened to Silicon Valley Bank. Nothing to do with cryptocurrency. It all had to do with this. So they kind of did this to themselves. And other people who are very familiar with the banking industry say, once these numbers came out, say, what were they doing? So that's what that was about. Now, also, some in the conspiracy theory side are thinking that a lot of this quickly raising interest rates was all coordinated with the large banks because they want to get rid of the small banks, particularly the small banks that are dealing with cryptocurrency exchanges. Now, is that true or not? Hard to say. But Jerome Powell has talked about cryptocurrency as well. We'll talk about that in a minute. So what's been happening with small banks along the way, and this is, so Lynn Alden posted this, which is a very interesting graph, which takes a look in the United States that we primarily have 4 major banks now: Citigroup, JP Morgan, Bank of America, and Wells Fargo. And over the last, since the mid-90s, they've just been eating up all of these smaller banks. Because I know here in Boston, back in the 90s, I was with Bank Boston. And Bank Boston actually bought out Bay Banks, became Bank of Boston, but then they got bought out by Fleet Financial, and then which bought out Summit, which then became Fleet Boston, but then they got bought out by Bank of America. So now I bank with Bank of America, but I didn't start with Bank of America. I started with Bank of Boston. So that was my history. But there's so many others here, like Wells Fargo, Wachovia and First Union, First Interstate. Those were all decent sized banks, but they all got eaten up over time. And here we've got JP Morgan and all of the banks that they've eaten up. And then we've got Citigroup who ate up the Travelers and others. So we now have these 4 like super banks, and those banks are in bed with the Fed. They're the ones who are right there at the table. So the Fed doesn't care about the little banks. They just want to keep these guys happy because these are the ones who really run the money in the United States. Very interesting. Very interesting what's going on there. And then we've got Mario Nawfal. So he's like, well, go back to Silicon Valley Bank, right? Things started unwinding. It took a little while, though. But what happened this past week or over the past few weeks? We had the Silicon Valley Bank president, the CFO, and the CMO selling stock, selling their own company's stock. The president, $3.5 million of stock were sold on February 27th. He had to have known what was going on with their bank and that things weren't looking good. Now, he probably had to file some paperwork beforehand. That's 11% of his overall, but he got $3.5 million out before the stock crumbled this week. That's not good. They're going to be clawbacks there. We'll see. We'll see how all that plays out. But that's kind of interesting too, that you got the president of the company, $3.5 million, and then he puts out this video last night to his employees saying he's sorry all this happened and he feels bad about the employees, not knowing what's going to happen in the future. And right, you've got your money. You're good, buddy. Kind of interesting. So where does that lead back to us with cryptocurrency? Well, we had CZ. CZ certainly thinks that all of this is coordinated. He's had a number of tweets the past couple of days talking about it. Considering all that's been happening in the crypto space, appears as if a coordinated attack was taking place to shut down crypto-friendly banks. So this goes back to Silvergate, which we talked about the other night, and now that contagion just continues, and it all harms cryptocurrency. So that's pretty tough. So is the crypto industry in danger? Well, Nick Carter, and I've talked about Nick Carter before. He's a Bitcoin maxi, been involved in Bitcoin for many years, and he's built up quite a portfolio himself as a partner in Castle Island Ventures. This is his company. He's doing pretty well. But so as crypto banks like Silvergate face increasing pressure, is it regulators themselves putting pressure on banks to ignore crypto? And that's what the message seems to be coming from the Fed is, hey, you banks, you better stay away from crypto. Stay away. So you don't see Bank of America or Citigroup or JP Morgan dealing with cryptocurrencies. The big 4 are staying away. But you got some of these smaller banks thinking there's probably an opportunity here to make some money. And Silvergate thought that they would be one of them because they could help on-ramp fiat, onto exchanges and then off-ramp them as well. Well, not anymore. So that's pretty tough. But he's talking about Operation Choke Point, which is this Obama era thing that their Department of Justice was doing in order to weed out certain banks that they didn't like, let's say. And he's saying that now we're in Operation Choke Point 2 in this Biden administration against cryptocurrencies. Carter says that crypto-facing banks present higher risks, different from collateralizing assets and less ability to insurable rates. So by labeling crypto-facing banks as high risk, right, because that's what the Fed is doing, they're saying Those banks have to pay higher premiums with the FDIC. They face lower cap rate with the Fed, face restrictions on other business activities, management risks, poor examination score with regulatory supervisors. So it's a tough battle. And what in the end is this really doing? If the United States government continues to battle against cryptocurrencies like this, all the cryptocurrency projects are all going to go to other countries like Dubai and Singapore, Switzerland, Hong Kong, the UK. And what's one of the best things there is about cryptocurrency is blockchain technology and the future of blockchain technology. And if all of that technology goes overseas, the United States is no longer an innovator in the blockchain business because the Fed doesn't like the banks being involved with crypto. They want to be in charge of the money. And as we saw in South Dakota, the state tried to pass this bill that was going to pretty much eliminate cryptocurrencies as currency to make way for some CBDC, which can be controlled by the government. The United States, the people, Americans are not going to like that. They don't want to be controlled. They don't want that sort of social construct coming in to this country where a government can decide whether your money is yours or not. If they think you've done something wrong, they can just click a button and say, well, there goes your money. That kind of thing's happening in China with that digital yuan. You got to have your social score. And like if you're caught for jaywalking because some facial recognition camera sees that you've committed a crime, they just take your money out of your account directly. They don't bill you. There's no charge. They just take it. Gone. That's already happening. Very interesting. And we also have, we covered this last week as well, New York Attorney General sues KuCoin. They claim Ethereum is a security. So we have this whole thing going on about, is cryptocurrency a commodity or a security? And some they're doing it with states. So here's state of New York. And you know this is from the Fed, right? That are making this happen. Because we already had the Fed do it, right, with Kraken before. Kraken paid this $30 million fine, said, we're not going to do staking anymore. And now they're going after Ethereum here. But they're doing it through KuCoin. So KuCoin is the one that's being sued here, not Ethereum directly. Because they can't reach that, right? Vitalik has that somewhere else, where the base of Ethereum is, but they can go after the exchanges, United States-based exchanges. That's what they're going after. So that's pretty tough. And then we have, of course, Jerome Powell warning the crypto industry, its turmoil. It's warning U.S. banks of the risks of getting involved in the digital asset industry. Just last Tuesday, Powell laid out a series of concerns he has with crypto, said lenders, the regulator overseas must be taking great care with engaging in it. Central bank didn't want to prevent innovation, but they are. But they are by this. Now, I get it. We had the FTX thing, but Jerome Powell was had private meetings we know of. Or no, maybe that was Gary Gensler. That's right. That was Gary Gensler of the SEC, had the private meetings with Sam Bankman-Fried. So Gary and Sam, there was something going on there. But Jerome Powell's like, we need to stay away from that. That can't happen again. And we need to protect the people of the United States by not getting involved in these high-risk areas. Well, don't you think we can make up our own mind about what we want to do? We don't want regulation to stifle innovation in a way that just favors incumbents and that kind of thing, Jerome Powell said. But like everyone else, we're watching what's been happening in the crypto space. What we see is quite a lot of turmoil. We see fraud. We see lack of transparency. We see run risk. but you also see a lot of innovation. And so what we're calling for is some simple regulation. Just define what is a security, what is a commodity. Let's figure that out. Let's solve this thing with Ripple and XRP. Let's just get it done. And a regulatory framework for banks to be able to work with reputable crypto projects. So all that can be figured out, because right now, nobody knows. We don't know anything. So that can all be worked out. But I get it with FTX, right? It failed, and so FDIC, Office of Comptroller, the Fed, all got together and said, look, these crypto-related risks can't be controlled, so they shouldn't be allowed to migrate to the banking system. Well, if you just define what the rules are, then they won't migrate too. The banks can actually help that innovation out, but they're doing it the wrong way. So what does this lead to? Well, this leads to, does crypto really pose a threat? Cryptocurrency has established itself as a viable alternative to a number of conventional financial products and services available in this country. That's what crypto can do. I know, especially dealing internationally, like if you saw on my channel that Bitcoin ad, that I saw, like, what does it take to wire money to, some other country? It's like 4 or 5 business days with all these fees on top. But yet we can do a wallet-to-wallet transfer of Bitcoin or Dogecoin, and it's done in an instant with low fees, and it's just done. But the Fed wants to protect the banks, right? Because the banks are the ones that are making the money. So they don't like crypto because crypto goes around the banks. It's still important to emphasize that as of right now, there's been no real evidence of a government conspiracy to leverage political authority in order to shut crypto off the US banking rails. Really? However, with back-to-back crypto crackdowns and the development of certain scenarios have certainly raised doubts in everyone's mind, as it's hard to pass it off as a mere matter of coincidence. So there you have it. Is crypto under attack? Yes, it definitely is. It definitely is. But what does that mean? Well, as we saw, it makes cryptocurrency even stronger. We have Bitcoin. Look at Bitcoin, just trading up. It dipped just a little bit under 20,000, but with all this FUD out there, people saying Bitcoin's going to 15K, 12K, 10K. Well, did that happen here? No, it didn't. Because what do we see? We see more people actually buying Bitcoin, putting more money into Bitcoin. The Bitcoin right now is actually safer than most banks in the United States, because we don't know what's going to happen to all those banks. Bitcoin doesn't have that problem. Doge doesn't have that problem. Ethereum doesn't have that problem. And that's why you saw them going up so much over the past 2 days. Now we're having a little retracement now. That's understandable. But for the past couple of days, it's been positive. With all of this crap going on, we're still seeing positive gains in the crypto market. That's pretty good. It's not all going to zero. I'm bullish on crypto. Is it going to be a bumpy ride? Yeah, it's going to be a bumpy ride. But that's what we got. And that's what I wanted to share with you guys today. All kind of interesting. Hey, Jason, how are you? Kumro, I think a few nights ago you said you have some Jasmine. What is your guess on how that one will play out? Well, I think a lot of that is going to depend on, as a typical kind of it's not really a meme coin, but it definitely is a high risk token. And at some point in time, Jasmine's going to have a run. And I just wanted to have Jasmine when it went on that run. We don't know when that's going to be, but at some point in time, Jasmy's going to go on that run. We saw Floki go on a run, which we showed the other night at the beginning of January, out of the blue. Just Floki just took off. Jasmy is going to take off at some point in time, and I wanted some Jasmy in my bags for when that happens, because I didn't want to be watching it again. I want to be in the game. So that's where I bought some Jasmy. Who knows how high it can go? It was interesting, though, today with the Shibarium launching, right? The beta of Shibarium, so that developers can now go in and start building their projects in Shibarium. She was kind of, you know what, had a little bit of boost here earlier today, but really not great. And Bone's going the other way. It's trading down. So the market on those two really didn't do as well, I think, as the sheep devs were probably hoping. Because bad timing. Yeah, we talked about this as well the other night. Kind of bad timing for Shibarium to be launching during this bear market, especially with all this FUD we talked about with the banks and the regulations coming out. Tough time to launch a new project. But I was really surprised of some of this, especially with Bone here dropping down. But again, it's a beta. It's not fully rolled out. New projects aren't really going yet. We're not seeing the SHIB token burns coming out of Shibarium yet. All that is going to take some time. So, but I think they're going to go on a run at some point in time, which is why I have a bag of SHIB tokens just for that run. And then I'll sell. Then I'll throw it into Doge or Bitcoin when I get to a certain profit level. So that's what's going on. That's what I'm looking at. Hey, Martin, how are you? USDC, silver, Silicon Valley Bank. That's the story. We'll see Monday morning. You're going to see lines probably at Silicon Valley banks around the country of people trying to get their money out. I mean, it's going to be like the Great Depression, right? You have lines like going around the block of people trying to get their money. I mean, it could be bad. I don't know how. I mean, it's in the hands of the FDIC now. In the United States, the FDIC insures up to $250,000 of your savings, but it could take quite a while to get that money through FDIC. But if you can get to the bank and actually make a withdrawal, then you got that cash in hand. So it's going to be interesting Monday morning, see what happens with the bank. And then I think you're going to see a lot of other banks too that might be in some kind of iffy conditions. We could see a lot of people lining up around the block. I'm at one of the top four. I'm at Bank of America. I didn't start as one of the top four, but became a customer of one of those top four. So I'm not worried about Bank of America. But some of you may have some of your savings in a small regional bank. We heard about First Republic as one on Friday that may be in some trouble. Their stock lost quite a hefty percentage of trading. So yeah, I think Monday morning there's going to be a lot of focus on the banks, and then there's going to be a lot of focus on the stock market too, and how the stock market is going to react here. But so far, as we're seeing, cryptocurrency market over the weekend is holding up very well. I mean, look at it. It's just flatlined for the past 2 days, pretty much, with little positive moves in Bitcoin, Ethereum, and Doge. Those three have seen kind of a slow and steady gain over the past 2 days. That's pretty good. Jason believes in the conspiracy. Yep. We have the CPI report coming out on Tuesday. So Biden, or the White House, put out a statement on Friday saying something in the order of that the CPI numbers were looking pretty good. That was a little hint. The White House usually doesn't do that, but they already know what the numbers are. So I think that's a clue to me that they're not going to be hot. They're going to be good. So I'm going into Tuesday thinking that that we're going to be okay with those CPI numbers. And then after that, there's going to be talk about, is the Fed going to, with FOMC the following week coming up, whether they're going to raise interest rates 50 basis points. A lot of people now not thinking that they're going to raise them that much because of what's already happening to the banks, because of this large rate of raising those interest rates has happened. 25 basis points. What if they just say, we'll keep it flat? That would be great for the markets. That would be great for the markets. Of course, that doesn't help inflation. I mean, we still have inflation going on. And then if the FDIC needs more money to help bail out, they're going to start just printing more money. The debt's going to go up. We're going to have to raise the debt ceiling in June. All that's going to play out. So it's going to be a bumpy ride. But I don't think we're going to see this CPI report be too bad. So it's a good point to add more Doge in your opinion, or wait a few days. So that's a question you have to answer for yourself. I think there could be Sunday night, and I'll be on again Sunday night, 9 o'clock. I'm on 9 o'clock every night. But I think we're probably going to have a little dip on Sunday night. That's my guess. Just looking at the charts right now is where we are on Saturday. That we're probably going to see a little dip happening Sunday, sometime afternoon or evening time, would be my guess. I mean, we're looking at 666 right now on the Doge chart, right? 666. I mean, I was buying a chunk up here at 7 just last week before this came down, and I bought more here at 687, and then I bought more here at 662. These are my green circles that I have on my charts of when I made my purchases. And so I'm out of powder. I'm all dry now. But that's up to you there, Crash Coin, to when you want to buy some more Doge. But I buy on the dips, and even if this went up to 7 cents, it would probably have another dip down into the 6s somewhere along the way. And that's what I do. I buy on dips. And this dip that we had here, I thought that was a good dip point, and it just kept going down. So I bought some more, emptied out my pocket there, all my buying power. And it even went a little further after that one, because I thought that I was really zoomed in on the chart there, and I thought that was the dip, and it ended up going even lower. But again, overall, I think recovery has been good so far through Friday afternoon and Saturday. This is looking pretty good. But I just think Sunday night, sometimes we have that where you start seeing a lot more red. So we'll see how that we'll see how that plays out. Crypto will prevail. Hey, Bill, the government needs to mind their own business. They can't even control what they have. It's funny what they pick and choose, right? The things that they pick and choose at is really something. I do believe that it will stifle innovation. Blockchain technology is the future. And maybe it is this path for them to be able to create the new digital dollar, this CBDC, central bank digital currency that they can control. And if they make all the citizens of the United States transfer to that, and they end up banning cryptocurrency, that could happen. But what does it mean? It means all of that technology and all of that innovation is going to go somewhere else. And we even have a lot of institutions that are into cryptocurrency. And I think that they've actually been lobbying to the government to not ban cryptocurrency because they have a lot of their wealthy clients as well that own a lot of Bitcoin, a lot of crypto. So they're not going to look very good if they were having some of their wealthy clients buying crypto. We will see. Hey, DM, you like the live streams? Sticking with you. Yep, that's what I do. Nope, I wouldn't be scared. Regality. You can rewatch the first half hour here. We'll be done in a couple minutes, and then you can rewatch it. You get my total take that I saw on what's been happening with the stablecoin, and the banks, and crypto's response. So yeah, go ahead and take a watch of that. When we're done, I will put the charts back on. 24/7 live stream Dogecoin chart will be on my channel. So we'll get that started up again. Let's just take a quick check here on the stable coins again and just see where they are. I believe they were at 97, 97 and a half and 98. So yep, USDC now up to 98.43. 98.43 we have on USD. So it's getting close to coming back up and repegging to $1. That, to me, that looks pretty good. That looks pretty good for USDC. It's almost back to repegging to $1. So that's pretty good. Where is DAI? DAI's at 98. So it's gone from 97.6. It's got a little bit of work to do. DAI still does. Kind of fluctuating between 98 and 97.4. But USDC is looking pretty strong. So, and DAI depegged, and what I read was this depegged because they have a lot of their reserves in USDC. That's why DAI depegged. So that's that. That's the tentacles, right, that reach out. So overall, I mean, look, Dogecoin is still the 9th largest cryptocurrency by market cap. Still $8.8 billion in market cap. Proof of work cryptocurrency, which I personally do not believe is a security. It didn't have airdrops. It didn't have no pre-release of coins. And even the developers, Jackson and Billy, they didn't mint themselves a bunch of tokens for themselves. They had to buy theirs just like everybody else did. That's the fairest launch ever. So I think if any cryptocurrency is not a security, the one that's most not a security is Dogecoin. So we'll see how that plays out. But that's my opinion on Doge. So please like and subscribe. DM says, thank you for the reminder. Appreciate it. Certainly appreciate the support. So thank you. To be honest, I want crypto and securities to go as low as possible, trying to increase your share. And yeah, that's really tough though, because you don't want the market to go down so low that faith is lost in it and it just never comes back. So that's that. You got to watch that kind of thinking, right? Got to watch that. But yes, Jason, this is what I've been saying. Bear market is where the wealth is made. That's right. Because we know where cryptocurrency was 2 years ago in 2021. Those were good times. And we know the crazy prices. And we could see that kind of run happen again. But if it ends up getting overregulated and banned, the opportunities of that might be a little less. we'll see how that all plays out. It's still going to be a bumpy ride, but I have faith in Bitcoin, particularly with the scarcity of Bitcoin, and the more people realize that this Bitcoin is this store of value and limited supply, that it's something more and more people are going to be buying. And other cryptos will follow. Some even at a greater percentage, because we saw that with the last bull run. And when it was altcoin season, particularly when Doge took off by itself, with SpaceX, Tesla, Twitter, all of these things that are going to be coming for Doge particularly, those are catalysts that will send Dogecoin to the moon. So I'll end it there, guys. Again, I'll be back tomorrow night, 9 o'clock East Coast time. I'm here in Boston. So look forward to seeing you then. I hope you all are well. Have a great rest of your weekend. And we'll see. We'll see how the markets do on a Sunday night. Again, kind of iffy for Sunday nights, especially leading into this very interesting Monday morning there's going to be with the banks. So we'll see how all that plays out. So hope you're well. We'll see you next time.
Dogecoin, which started as a complete joke, has like skyrocketed to not a joke anymore. It hit an all-time high of almost 10 cents yesterday, but it was so minuscule you wouldn't have understood why you have millions of shares.
Didn't Elon tweet that too?
And arguably, the most entertaining outcome and the most ironic outcome would be that Dogecoin becomes the currency of Earth in the future.